Ladies and gentlemen, unemployment has been pretty dismal in the US. The last time they put out the unemployment claims, we were well over 40 million. And, the analysts were saying the unemployment was at 14.7%. Well, now they are saying as of this coming week, we will be very close to 20%. So this came out on CNBC. Expect more shocking economic data in the week ahead, with the unemployment rate set to near 20%. And this is May 29th, 2020. The big rotation into unloved stocks like banks, small caps, and airlines took a break Friday, but it could be a theme that dominates trading again in the week ahead. Investors will be assessing the progress of economic reopenings against some new headwinds for the market. The stock market has mostly discounting unprecedented weakness in the economic data, but the May employment report will still be a major interest Friday. Economists expect to show another shocking loss of jobs, this time roughly 8.5 million after the 20.5 million loss in April. The unemployment rate is expected to jump to a staggering 19.8% from 14.7% in April. Increasingly frayed relations between the US and China geared up at the end of the week as a negative force for the market. Analysts expect the stress to continue to be a concern. The US joined other nations to condemn China's new security rules for Hong Kong, which Beijing sees as an attempt to quell protesters. And another thing is when Donald Trump decided to exit the World Health Organization last week. So, and there's a ratcheting up of pressure on technology firms and social media firms. A lot of overlap in big tech in terms of China exposure. There's a lot of headwinds facing NASDAQ name, shelter in place name, and China exposed technology names. The big tech stocks have lagged lately, but they are still a top leader quarter to date with a 20% gain. In the past week, they were up about a 0.5%. All right. But really, the main thing in this story is the unemployment. And right now, the economic reopenings, that's probably the most sensitive thing that's going on. You know, they were hoping that everything would reopen in waves. That's why they're talking about all these different phases of opening the country, which I'm telling you, it's never going to fully be where it was before. And I still stand firm on they're not going to be able to keep all of these places open. So they are expecting the stock market to be pretty intense over the next couple of months. Trump executive order to seek to limit the federal law to provide broad legal protection for social media and other online platforms is one headwind for the sector. Trump issued the order Thursday after Twitter put a fact check label on one of his tweets criticizing mail in election ballots. The president accused Twitter of political activism. So, y'all tell me what you think. I think the more important thing in this story is the unemployment rate. Wow. We saw how the last 2 months have gone. We're about to enter June. I have a feeling it's going to be very, very interesting on many levels. But y'all, please tell me what you think. Please leave your comment and subscribe. Don't forget to hit on the notification bell, and I'll see you on the next video. Peace, family.